Hi traders, and welcome to the Technical Analysis Market Wrap on the 5th of February 2021. So we've seen a pretty exciting week in the markets. The indices have certainly played the game on the long side, but we are moving into a non-farm payroll day. So we'll look at the market a little bit cautiously and we'll jump straight in and see if there's any opportunities that we could take advantage of early into next week. So we'll start out with the Aussie. The Aussie USD has been a funny one this week. It's really done a hell of a lot of nothing. It's been effectively stuck in a 100-point range for effectively the whole week, really. You can see here each of these candles has been no more than 100 pips, and even only one of those days was the full range of 100 pips. The rest of them have been pretty small. So yes, it did break past the 20 moving average, which is obviously a good sign for it, but the 50 has certainly pulled it up and it's getting trapped within this range. Now, no surprises here. I mean, this is a role reversal zone, really. You can see it with a bit of resistance there. It's hard to trade this one knowing that it could very well break to the low, but it's finding very good support there. Look, and going to the smaller time frames really highlights this. You can see that this is the 4-hour chart. It's done basically a whole lot of nothing. Even if you're trying to trade short, it's really not really going anywhere. Like, you could be taking the 20 moving average to sell down, but you know the ranges are very, very small, not ideal at all. Even going through the 1 hour, you can see basically flatlining. And the 15-minute chart really doesn't give you any more. Look at that. I mean, that's just, it doing a hell of a lot of nothing. So these are the ones that you really leave alone until you actually see a break either side. It needs to break the 50, well and truly. Now, if we get a daily close below the 50 moving average here, that opens up a whole range of movement all the way down to 74 cents. So realistically, if we get that, then all of a sudden we start to get excited about this. My general feeling is that it probably will break to the low, mainly because the MACD. MACD sort of dropped here because you can see we've had a whole lot of nothing. So the MACD moving averages are basically coming together and ribboning now. So that's why it's almost at the zero. But it seems to me that the real support will be at that previous resistance here. So if it does happen to break this 50, which is what I'm thinking it's inclined to do given the dollar strength, that is going to open it up to a pretty good move. So once that happens, I think we're going to be back into the Aussie and starting to trade it properly. But until then, just really a watch and see on this one. Very difficult to scalp or do anything with. So we'll move on now to the US dollar CAD. This has been really good. I think it's provided some really, really good opportunities all week. I know a lot of people have been getting in and emailing me. They've got into this several times over, and it's certainly playing the game. This is the daily chart, so you can see the morning star pattern that we had a little while ago certainly fulfilled its potential now, and we're hovering well and truly above the 20 moving average, which is really important. You can see that we've done that effectively for a week and a half now, which is really, really important because it gives that market strength. And the and you can see that, look at the moving averages about to cross to the upside on the MACD version. So we're definitely above zero now. The 20 is fast approaching the 50, which is good. Hasn't done that in a very, very long time. So we've really established a really good base down here. And I think that even going to the smaller time frames, you can see that you've got some pretty good opportunities. We've got the lightning bolt effects on all of the key time frames. You can see that. Okay, they all provided really good trading opportunities. Again, once it did break out, 20 moving average pullback, 20 moving average pullback, up every time. So the strength was there. You're able to trade in that direction. I think that's what a lot of people got hold of this week, which is really, really good to see that people are following the technicals, on the bigger plan. So we've got a bigger plan here. We know that it's got potential all the way to 130. If it breaks above this 50 now, that'll almost be a formality. You'd think that it's going to get up to this level. So, we're certainly not going to preempt that. We wanted to do it, but it's all signs are really, really good that the strength is there. And that's going to be highlighted by the dollar index when we get to that. I will get to the dollar index shortly. But firstly, I mean, that's obviously a good trade. So hopefully you're able to get hold of some of that. Having a little bit of a pause now, but no surprises there. I think that the strength is still in this one, and a break above the 50 will be our next entry point, and we'll go effectively looking for the 130 target. All right, we'll go to the US dollar Swissy. This has been the breakout trade of the week. I really, really like this one. This inverse head and shoulders has been setting up for a long time. We've been talking about it for the best part of 2 weeks now, and it's finally fulfilled its potential. It broke out here on this breakout candle here, came back and almost retested it, so it gave you the reload zone that you needed. MACD was always playing the game here, so we were very happy with the MACD. Even below here, you can see that the stochastic changed even before the break, so gave us plenty of opportunities to get in. We've been talking about it for weeks, so no surprises. Hopefully you're able to get hold of it and set your alerts, because it was a very important break, and it is a really nice inverse head and shoulders. Pretty much all but reached its potential. Now you can see that, because the way we measure this one is effectively measuring the bottom of the head to the neckline, okay, and then we project that out, okay, and that's pretty much going past the really strong support zone that you can see. It's pretty much right at this support zone now, which is, you know, nearly 75 to 80% of the move that we're expecting. That's going to be the problem for it to actually fulfill the potential of the inverse head and shoulders, and knowing that the US dollar Swiss is not the strongest of pairs. But yeah, this is a very, very strong support zone that it's got to break through now. This was very, very strong support here. You would expect that it's going to provide pretty serious resistance at this point here. So yeah, it might push up, but I think I'd be locking in a lot of the profit from this trade right about now, because it's got a lot of problems in front of it, no question about that, but a really, really good trade. So if you want to be looking for any more trades on this one now, you're probably looking for maybe a counter trend scalp. That's all you'd be doing, and I wouldn't be going very hard for it either. I'd be looking for pretty short and sharp opportunities. It needs to break obviously below the 20 on the 15-minute chart at the very least, form a series of lower highs and lower lows, and then maybe trade a couple of those opportunities. But even here, you can see that although it looks like a very, very big breakout here, you only have to go back to a 15-minute chart to see all of the opportunities you had to join in this, what is a very strong break of a pattern, okay? So you had at least 3 opportunities there to get onto the 20-moving average and trade that long. So always go down to the 15-minute chart when you're looking for an entry if you missed the initial burst. All right, we'll move on to the dollar index next. So this one's painting pretty much the same picture as the dollar Swissy was. That inverse head and shoulders that we've been talking about finally broke through, and you can see now in play, it's breaking up to the highs. 91.50. The target is our 92 zone, as you know. Showing a lot of strength. MACD is definitely positive for this one now. Like, it's looking really, really strong. It's a very, very significant break, trading well and truly above the 20-moving average now. And we've got the series of high highs and high lows that we're looking at on a very, very important time frame, which is a daily. Now, the good thing about the dollar index, of course, is it gives strength to a lot of the US dollar-based pairs that we're talking about today, but it's also the inverse of the Euro USD. So, even if you weren't trading this one specifically because of spreads or whatever, all you've got to do is basically replicate what you're trying to do here, just in reverse on the Euro USD, which we'll have a look at in a minute. But you can see that the pattern that we've been talking about again for weeks, it's been a long setup, but when you're looking at a daily chart, every one of these candles is a day. So you're talking about many weeks setting up for this break, and it's certainly happened now, and it's giving us all the opportunities that we've been talking about. So hopefully you've been able to get hold of some of those. We'll jump into the euro now and look at the inverse of what the dollar index is telling us. And of course, it's painting a very similar picture. You can see that we had the breakdown of that very key level around the 120.80 area. Once that broke down, it's been basically selling off all week. It came down. It's found itself now at a place where you would think we're going to get some sort of a retrace. This is the resistance from back in August of last year, August, September. You can see it was pretty strong resistance there. We would expect now that this is going to provide some level of support. I don't know whether that support will hold. I think that there's enough power moving down. The dollar index looks like it's got plenty of legs in it. Although 92 will pull it up at some point. You would think that the 92 will hold it for a while. The euro still looks quite weak. So, and we've also got the lightning bolt effect. This week's given us that full lightning bolt effect on the daily, which is awesome. The 20 and the 50 moving average are all but crossed. Give it another day of weakness, and this will be crossed. MACD is going down. The next target for this one really is probably the 200 moving average on the daily, which is around that probably 117. It'll be above 117 by the time it gets there, so probably the 117.50 I would think would be the target that I'd be aiming for, which is basically the bottom of this little mini channel that formed at this level here. So yeah, the 200 will be getting pretty close to catching up, probably not quite because it is a slow moving average, but that's the level I'd be looking at taking profit if the shorts continue. But like I said, I don't know if I'd be just jumping in on the sell now. Well, I wouldn't, I can tell you that. I'd be waiting for a bit of a retrace up to, at the very, very least, probably 120 to 120.20 level. and that sort of zone, look for a retrace there. It would hopefully catch up to the 20 moving average at that point on the smaller time frames, probably more importantly. Okay, you can see it's detached itself from the 20 moving average. Now, I'd like to see a bit of a pullback up to the 20 moving average on the 4 hour, probably at the very least. If it does that, I'd be looking for small changes of trend on the smaller time frames to continue the short down. No reason to be thinking this is going to go long anytime soon, until, of course, it gives us the evidence that it's actually going to do that. Just be very, very mindful that it's non-farm payrolls tonight, of course, so the moves are probably going to be a little bit slower than normal, and we're going to see some consolidation and maybe a little bit of, backtracking from these key levels that have been reached over this week. So just be very, very mindful of that. I don't know if we're going to get a lot of opportunities today, but I think the opportunities early next week are going to be great, because I think you're going to probably see some of the continuation of these trends, unless the news is very, very different to what the market is expecting. So looking forward to a really good continuation week next week, which should be really, really good for a lot of the majors that we're talking about. The other one I want to revisit is the US dollar pound. Now, this one here is a very, very interesting one, because although it's, basically the pound against the US dollar, obviously, this is proving to be very, very resilient, this level. Now, when I did the Q&A yesterday, you can see that, that this was just a big red candle, looking like it was going to bust the 20 moving average finally, but it has completely reversed that whole move and shown an extraordinary amount of power. And yeah, this is being an extraordinarily resilient pair, this one. And again, it's basically pulled up all the way past the 20 moving average. I would not be shorting this one until it gives us evidence that it is finally starting to keel over. And even though it's looked like it's been doing so, this is why it's so important to actually wait for the confirmation close. Because if you had looked at this it was about 9 p.m. last night, Melbourne time, this was a big red candle looking like, for all the money in the world, that it was going to short down very, very heavily. But again, the power came in, and look at the reversal. And it's not due to US dollar weakening. I mean, you can see the US dollar strength in the index and the dollar-based pairs. This is just the pound being very, very strong. And yeah, up she came and closed above the 20 moving average, which is a very key move for it. So this is just a real watch and see. I'm still not keen on taking it long, but I'm certainly not going to take it short until we get that close below the 20. I think it's just a wait and see on this one. This level's proving very difficult to break as well. So as much as it's not going down, it's not going up either. So I think it's caught within a range that is very difficult to trade. And you really want to see some evidence of a break either side before you start getting involved in this one. But yeah, my inkling is still to the short. I think it's had its chance to break higher if it was going to, and although the resilience is still there to stop the shortest kicking in, I think at some point, the lows are getting lower and the highs are getting lower, and I think it'll probably give. And when it does eventually give, I think the floodgates will open for this one, but I'm certainly not going to preempt that. I'm going to wait for that to happen before we start trading it. Okay, so we'll move on lastly to the US dollar yen, because I get a lot of requests for this one. This has been a very, very strong trade. The inverse head and shoulders well and truly broke through, as you can see. This one has pretty much fulfilled its destiny, though. You should have already taken this. We've been talking about it for a while through many different segments, but the inverse head and shoulders was definitely there. It broke through, and it's reached its target. You can see that the distance that it needed to travel has been traveled. It's at a previous support zone, which will now become resistance. So no, it's just technical analysis playing out there. So there's no real surprises there. Again, though, if you miss that initial burst and you're looking for entry points to try and get in, I haven't even got a moving average on this one, but I'll put one on for us. Okay, we'll pop this one in here. We'll go moving averages. And we'll pop a 20 on. So the 20 moving average, we'll go the EMA, of course, and we'll make it red so we have consistency, and there we go. So even though it was a blast out of the neckline of the inverse head and shoulders, you can see that the opportunities were there to actually get involved in this trade. Once you know it's going in a certain direction and you've got a very strong bias to where it's traveling, go to the smaller time frames if you've missed the initial move and scalp it to its destination on the bigger time frame. Okay, so as you can see here, you had 3 pretty good entries to get in on this one, and hopefully you were able to catch a bit of that. I know a lot of people did, because I got a lot of emails, so that's awesome that people were watching, and it's awesome that people were able to actually set the alerts and take part of those very key breaks. So thank you once again for joining us. You can see that, again, the markets are going to slow down today. Non-farm payroll, very, very important. So just remember that make sure your stops are safe. And, if you're a little bit iffy on the trades that you're in, probably take them out before the news so your close stop losses don't get hit and then unnecessarily lose. Potential for good trades, which would start again next week. So we'll revisit it again early in the week, and I think that's when the opportunities will come once the news is out of the way. So hope everybody's had a great week's trading. We've had some really good opportunities. Hopefully you're able to take advantage of that and have a great weekend, and we'll see you next week.